Focus brought to you by IG. Mean reversion in forex trading. Going to look at some pros and cons, as this has been a really, really popular topic in recent years for good reason. We've seen some huge, huge historical extremes in forex markets. It's been, if you're into big moves, price extremes, forex has been a really interesting place to be over the course of the last 3 or 4 years, and continues to be, and we'll get to that in a second, some current examples of some price extremes. But what is mean reversion trading? And I thought, why not look at what is right now one of the most popular forex markets, has been for years, euro versus US dollar. In the long term, this is a chart for the last 30 years of euro USD movement. The long-term mean is about $1.20. Okay, and you can see here this market has hit that level several times in the last 30 years, but it's also moved to as high as over 150. It's moved to as low as 90, even down to around 85 cents back in the early 2000s, and just last year broke down below $1, saw that price extreme and a bunch of news stories around that, and has recovered a little bit back to 110. Mean reversion is this idea of a market, a price that over a historical time span has encountered its average price multiple times, and there could theoretically be a case for that market whenever it gets far away, reverting back down to its mean, and whenever it gets far away to the downside, reverting up to its mean. And so that's mean reversion in a nutshell. Forex is definitely considered one of the most mean reverting markets, similar to option implied volatility, and also some commodity markets as well, considered mean reverting, not the stock market. If you look at a long-term chart of the S&P 500, it's got a new mean every couple of years as it has ascended over the years from 1,000 to 2,000 to 3,000 and now well above 4,000. So that's an example of a not very mean reverting market. But I do want to highlight, how you might look at trading mean reverting markets, and also, some of the risks that are involved, because even if, there's a historical case to be made for some of these forex markets having a long-term mean, and when they hit price extremes to the up or downside, reverting back to that mean, there's no telling where it will mean revert from. And also, theoretically, it should be stated that markets can move wherever they want. They don't have to mean revert, even if there's 30 years of data supporting mean reversion. The market this year is somewhat memoryless to that, and it can go wherever it wants. And so here's an example of a market that did turn around from its highs and is maybe showing some mean reversion right now, euro yen. While short positions are feeling good right now, riding that mean reversion lower, if you got in too early, you could still be at a loss here. And that brings up that question, in this euro yen chart, if the long-term mean is 120, let's say, and now we have the last 20, 25 years of data here for the market. If the long-term mean is 120 and the high is 170, sure, that's great. The market can get to 170 or even higher. So how would I know that 150 or 153 or 155 or 170 is where I should be getting in? Because if I get in at 150 and it goes to 170, then that might be all she wrote for me and my account size. And so, there's some real risk here, but there's also some ways that you can mitigate some of that risk as well. Looking at this example, a couple of risk management tools. One, scaling into a position as opposed to going, full exposure in one shot, so to speak. also using stop loss orders, or just the idea of taking a loss in a position, not having to be so stubborn of every trade I put on has to be a winner, but taking a loss here or there and opening yourself up to get back into that trade at a better price or get to a different price extreme, exercising more occurrences, so to speak. And then also diversifying among extremes. What's really nice about the forex space is, there are dozens and dozens of pairs, not only invoking the US dollar, but also the one that we just looked at, euro versus yen. You could trade euro dollar, dollar versus yen, pound versus dollar, or any permutation of those. Or you start to bring in Australian dollar, Canadian dollar, all these different currencies, so many different pairs, so many different ways to manage some risk, as opposed to one big bet on one market. Never really an exercise you want to go down there. Want to try to use as many risk management tools as possible. And so what is scaling? What are using stop losses? What's diversification? Scaling essentially would be the idea of, okay, this euro yen market, if I don't know the right prices, 152, 154, 156, or 158 to sell from, well, instead of selling one lot at 152, I'll sell a quarter of a lot at 152. And if it reverts from there, good, I made money on that trade. But if it goes further, I have money in my account to scale into that trade, as opposed to one big bet. Stop losses, a similar idea in terms of flexibility. I should be comfortable with the idea that, okay, I've sold at 154, and if it gets to 156, I'm going to close it out. And then I can get back into that trade at 157 or 158 there, but I'm not just going to sell at 154 and hope that it reverts from there. And I'll take as much heat as possible to the upside. Taking those losses, and thankfully stop loss orders help you set that parameter at order entry, which is really nice for you mechanical traders out there. And then also diversification. Yes, this euro yen was a big extreme. A lot of people talking about it recently, but right now you're seeing pound, Australian dollar, two major currencies there that maybe you don't think about that often, but currently seeing multi-year highs as well. So exercising this mean reversion tactic, if it's interesting to you, it aligns with your portfolio and the way you like to trade, exercising that among as many different markets as possible, also helpful in risk management. But there's mean reversion in forex with not only what it is, how to do it, but some risk management tools as well.